Hi everyone. In the previous video, we practiced converting individual revenue and expense account balances from the cash basis to the accrual basis. In this video, we'll convert cash basis net income to accrual basis net income. Now, I'm going to point out something on this slide and in your textbook that is absolutely critical for you to get these things figured out. Illustration 219 in your textbook is the same as this illustration right here on this slide. It is so important that you should flag illustration 219 in your textbook. And it gives you a formula. It's like following a recipe for making a cake. It gives you the formula to use in converting from the cash basis net income to the accrual basis net income. And this formula says that any current asset, such as accounts receivable or prepaid expenses, if the balance in that current asset increased during the year, then add the increase to your cash basis net income in doing the conversion. If the balance in any current asset account decreased, then deduct that balance from your cash basis net income to arrive at accrual basis net income. Then look at your current liabilities, such as accounts payable, wages payable, rent payable, etc. And if the balance during the year in that current liability account increased, then do the opposite. Deduct it from your cash basis net income to arrive at accrual basis net income. If, on the other hand, the balance in your current liability decreased during the year, then add that decrease to your cash basis net income and arriving at the accrual basis net income. You will not be able to figure out what the accrual basis net income is unless you flag this page and carefully follow this formula. So now that we know what the formula is, let's look at the 4 steps involved in converting the cash basis net income to the accrual basis net income. Step 1. Calculate your cash basis net income, and that's the cash received from customers less cash paid for expenses. Step 2, deduct depreciation expense. Step 3, you need to add some things to cash basis net income, and what you need to add is told to you right here. Add increases to your current balance accounts and add decreases to your current liability accounts. Step 4, you need to deduct some things from your cash basis net income to arrive at accrual basis net income. And this formula right here tells you what you need to deduct. Deduct increases to a current liability account and deduct decreases to a current asset account. Okay, so you need to write some of these notes down, and you need to either write this down or have illustration 1219 in your textbook flagged so that we can move away from this page and practice with an example of converting from the cash basis to the accrual basis. You're not going to see this page, so you're not going to know what these 4 steps are and this formula of adding and subtracting unless you get it written down. So pause the video, make some notes from this, put a flag on illustration 219 in chapter 2 of your textbook, and then start the video again and we'll work on an example. Johnstone Maintenance Company maintains its records on the cash basis. During 2021, the company collected $174,000 from its customers and paid $101,000 in expenses. Depreciation expense of $15,000 has not yet been recorded. During the year, accounts receivable, which is a current asset, increased by $9,000. Prepaid expenses, which is also a current asset, decreased by $3,000. Accrued liabilities, which is a current liability, decreased by $700. And deferred revenues, which is also a current liability, increased by $1,200. Let's follow the 4 steps shown on the previous slide to calculate Johnstone's accrual basis net income. Step 1. Calculate the cash basis net income. Well, that's $174,000 of cash collected minus $101,000 in expenses paid equals $73,000. Step 2. Subtract depreciation expense of $15,000. Now we need to add some numbers and deduct some numbers. We need to add increases in our current assets. Accounts receivable is a current asset, and its balance increased by $9,000, so we need to add that to the cash basis net income in arriving at accrual basis net income. And we need to add decreases in current liabilities. Well, accrued liabilities, the balance in accrued liabilities account decreased by $700, so we need to add that to our cash basis net income. Then we need to subtract some things in step 4. We need to decrease the cash basis net income by decreases in prepaid expenses, which is a current asset, and the current asset prepaid expenses decreased by $3,000, so we need to subtract that from our cash basis net income. And we also need to deduct an increase to a current liability. Well, our current liability deferred revenues increased by $1,200, so we need to deduct that from the cash basis net income. So the accrual basis net income then is $63,500 after applying our 4 steps. $73,000 of cash basis net income minus depreciation expense, plus the increase in accounts receivable, plus the decrease in accrued liabilities, minus the decrease in prepaid expenses, minus the increase in deferred revenues, equals $63,500. Okay, let's give you a chance to practice. Here's a concept check problem for you. Dan White Draperies maintains its records on the cash basis. During 2021, the company collected $75,000 from customers and paid $21,000 in expenses. Depreciation expense of $8,000 would have been recorded on the accrual basis, and over the course of the year, accounts receivable increased by $7,000, prepaid expenses decreased by $5,000, and accrued liabilities decreased by $4,000. Calculate Dan's accrual basis net income. It will be either A, $41,000, B, $57,000, C, $52,000, or D, $45,000. Make sure when you're trying to decide what balances to add and subtract from your cash basis net income that you look at illustration 2-19 in your textbook and remember that increases to current assets are added to the cash basis, decreases to current liabilities are added to the cash basis, decreases to current assets are subtracted to the cash basis, and increases to current liabilities are subtracted from the cash basis, all to arrive and convert the cash basis of accounting to the accrual basis of accounting. So please use the information here, plus illustration 219 in your textbook, to calculate Dan White Drapery's accrual basis net income for the year 2021. Pause the video to do your calculations, then start the video again to check your answer. Did you choose answer C, $52,000? That is the correct answer. Let's take a look at the calculations. Step 1. Calculate the cash basis net income. Cash receipts of $75,000 less cash disbursements of $21,000 equals cash basis net income of $54,000. Step 2. Deduct depreciation expense. Subtract $8,000. Step 3. Deduct, well, let's go this way. Step 3, add some numbers. Add the increase in accounts receivable of $7,000 and add the decrease in accrued liabilities of $4,000. Then step 4, deduct the decrease in prepaid expenses of $5,000, and that will equal then the accrual basis net income of $52,000. Cash basis net income of $54,000 less depreciation expense of $8,000 less the decrease in your prepaid expenses, current asset, of $5,000, plus the increase in accounts receivable of $7,000 plus the decrease in accrued liabilities of $4,000 equals accrual basis net income of $52,000. Well, that's all for this video. I'll see you next time.